Hi traders, welcome back to J Trading. For the last couple of weeks we have been talking about price action trading, boom and crash, also volatility using trend line. We have focused on resistance, support and trend line, also how to trade breakouts we have seen. In fact, it's not done. I know price action is not only 2 or 3 videos. We will continue on that, but today's video will be a bit different because I'm here to share scalping strategy, because most of you have been asking me how to scalp boom and crash in 1 minute. If you remember, before 1 month I think I shared a video about gold digger strategy, which is my own strategy that I use personally. Whenever there is no good price action, I scalp on 1 minute. So I use gold digger, but this strategy will be the same as gold digger, where you can use this strategy to scalp boom and crash, only boom and crash in 1 minute. So it's not for catching spike, it's only scalping the 1 minute or small candlesticks. So before we get started, the topic will be MACD. I hope you know about this. It's called MACD strategy. So we will talk about this and the secrets how to scalp 1 minute using MACD strategy. But before we get started, I'll show you something in Telegram. About 306 members I think already joined my Telegram channel. Every day I'm sharing analysis on boom and crash. On this channel we share analysis daily, not only boom and crash. We have volatility also, volatility 75, volatility 25, and so on. So we have a lot of analysis here. They are free, they help you to understand the market. We share personal experiences and personal knowledge here. Plus they kind of act like signals. You can use those analysis as entry signals also. We have results here. Some of the students have been sending their screenshot. They're making money. If you want to make money, and the same time if you want to learn how to make money, join this Telegram channel. The link will be in description. So let's get back to our new strategy, which is called MACD strategy. So this strategy is very simple. I hope you all know about MACD. It's an indicator. You can find this indicator in any kind of platform, in any kind of trading platform. So in MT5 we have a MACD. MACD has three parts. The first part is called MACD line. It's called MACD line. And the second part is called signal line. Then the third one is called histogram. So I'll show you what each of these things mean step by step. So the first one is called MACD line, and MACD line is called it's a 12 EMA exponential moving average minus 26 exponential moving average. Actually you don't have to remember all this, I'm just briefly explaining it to you. 12 EMA minus 26 EMA, this is called MACD line. And signal line is 9 EMA. 9 EMA means exponential moving average of 9 days. So this is called signal line. And the histogram finally is the MACD line minus the signal line. If you want to see this in drawing, an illustration, it looks like this. We have MACD line like this. Simply it's a moving average which moves up and down. Then next we have also signal line which follows MACD line like this, up and down like this. Then finally we have histogram. Histogram is some kind of illustration with horizontal line then we have vertical lines which are short, then tall in either upside or downside. So they are always either in the upper side or lower side, and they are taller or they're shorter. So the blue one is histogram, remember. The green one is MACD line, and the red one is signal line. MACD is 12-day EMA minus 26-day EMA. Signal line is 9-day EMA. Then finally histogram is the difference between MACD line and signal line. The advantage of using MACD strategy or MACD indicator is it's quite different from other indicators. The reason most of traders like MACD is because MACD does not lag. Look, MACD doesn't lag behind. Most trading indicators, they lag behind price action. That means let's say there is a buy signal at 9 o'clock, but the indicator will tell you to buy after 1 hour, maybe at 10 or 11. So that means you might lose because the trade will not long for buy maybe 1 day or 2 days. It might only be for 30 minutes or 1 hour. So if the indicator does not lag, that will be advantage. That's why MACD is very important. MACD does not lag behind price action. I will tell you this, I'll show you this by illustration. Okay, so now let me show you how to import the indicator or the MACD to our chart. First, go to indicators list, then choose MACD. Here we have MACD. So click on MACD, then we have parameters and styles. Actually the MACD will be by default set to fast EMA 12, slow EMA 26, and the MACD SMA will be 9, then apply to close. Don't change anything, just go to style. If you want to change the color or the pixel or the size of the line, you can choose different style, but for the moving average the parameter is same. Just let it be there. Fast will be 12, slow will be 26, and the MACD SMA will be 9. Then when you're done, okay, click OK. So finally the chart will look like this. The MACD indicator is like this. The reason I'm here is, first I want to show you that the MACD does not lag behind moving average. No, does not lag behind price action, right? So let me show you this. I'll go to indicators list and I will add moving average, the same moving average with MACD. So the first one is 26, and the second moving average will be 20 moving average, sorry, 12 moving average. Then I'll choose color orange, then done. So we have now, let's go to 1 hour time frame. On the main chart we have two indicators added. Those are the moving average, 12 moving average and 26 moving average. Those indicators are same in MACD also. Here down in the indicators list we have MACD, right? The red line is the signal line. Actually that's 9 moving average, so I need to add another moving average there. Let's add 20. I just wanted to show you that MACD does not lag behind the price action, right? So here if you see, we have two moving averages on the main chart and another 2 moving averages on the indicators chart. So if you see this point, the 26 and 12 moving average crossed each other, right? But if you go to the indicators, chart, here they crossed before the main chart moving average crossed. You can see the difference like this. On the MACD, the moving average crossed before the moving average, those which are in the main chart. That means the MACD, if there is a sell signal in the MACD or in the market, the MACD will tell you first. That's why most of traders, they choose to use MACD. This is the reason I'm also here, but the main thing is not this one. The main thing we want here is to scalp 1 minute. So let me clean our chart. I don't need moving average in the main chart, and I don't need the moving average in the indicator. So I just need only MACD. So my chart will finally be like this. Then I'll go to 1 minute. So to the most exciting part. Now we have to scalp all these white small candlesticks, right, on 1 minute chart. So how can we trade this? Let me show you this. Let's go to whiteboard and I'll tell you the secret. It's super easy. I know gold digger was a bit complicated for you. Some of you guys have been struggling. They said it's complicated, but it's easy actually. But the MACD strategy will be more easy than gold strategy. Look here, follow attentively. We have the price action, right? Let's say we have one spike here. Then the market, let me change the color. After the spike, the market went down. Then again, another spike happened. Another spike, big spike. Then after the spike, again the market went down like this. So the same time on the MACD strategy, what will be happening? On the MACD strategy, we have the histogram. We have histogram like this. When there is spike, the histogram will be in the upside if this is boom. Then when the market goes down, the histogram will also go down. Then when another spike happens, again the histogram will go up. Then when the market goes down, the histogram will also be shorter and shorter and shorter. Then it goes in the opposite direction like this. So all we need to see is only the histogram and the spikes. The main concept behind MACD strategy is divergence, same as gold digger strategy. I've talked about RSI divergence, MACD strategy divergence, and force index divergence many times. The reason behind this is divergence tells you the true breakout, the true momentum reversal, and the true trend ending point. Whenever you want to know when the trend ends or where the trend breakout will be, or if the trade which is breaking out of trend line is true or false, you need to see sometimes the RSI, maybe divergence, or just go to force indicator if there is divergence, or just go to MACD and see if there is divergence. In this strategy, you need to see if there is divergence between the spikes and the MACD histogram. So if you see this chart right here, the spikes, the second spike is greater than the first one. So that means the line which connects those spikes will be slant, maybe 30 degree, so it will be upward, right? It will be directed to the upside direction like this. When you come back to the histogram, you need to connect those crests or the tip points of the histogram which represent the spikes. So when we connect these points together, we got the same lines. Those two lines, they are directed in the same direction, right? So that means there is no divergence. Whenever there is an angle difference between lines, there is divergence. But if those lines are directed in the same direction, there is no divergence. So let me show you divergence, market with divergence. let's say we got first spike like this, then the market went down, and again another big spike happened, and finally the market drove down like this. And on the histogram also we have histogram like this. On the first spike there will be histogram in the upward direction, then when the market goes down the histogram will be smaller and smaller, and again when the second spike happens the histogram will try to go up, will be a bit taller. Then let's say it happened like this. When the market goes down the histogram will also be smaller, and finally it will be in the opposite direction. So if you try to connect those spikes together, the first line will be in upward direction like this. So the arrow will be pointing in upward direction, that's about 50 degree, more than 45 degree. So on the histogram, if you connect those tip or end points, the line will be almost horizontal. So if you see these two lines, they are not directed in the same direction. One is horizontal and the other is upward direction. That means there is market divergence. This is when we take advantage. So you can enter a trade right here. I'll show you this on illustration there on MT5. So these all candlesticks will be safe to scalp. So let's go to MT5 and see this MACD strategy with real life illustration. Okay, now let's see some examples on boom and crash chart. I prefer using both gold digger and MACD strategy on either boom 1000 or crash 1000, because on 500 assets, that means boom 500 or crash 500, there are a lot of spikes. Many spikes happen every time. So if you want to scalp safely, please scalping 1000, either boom 1000 or crash 1000 will be safe for you to scalp. So let's see if we get any kind of MACD strategy confirmation. That's called divergence, MACD divergence. So if I see MACD divergence, I'll show you here. Let's see this boom 1000, this is boom 1000. Here we have two spikes. Let's check if there is divergence. Connect those spikes together, then go to the histogram and connect them. If you see, we have divergence right here. The first one, the line which connects the spikes right here, it's directed upwards, and on the histogram the line is almost downward. That means there is divergence, so we can take advantage. You can enter a trade. Okay, the entry will be, you see this red line, the thin red line on the MACD, that one will be used as entry. So after we get so we have divergence right here, right? So after this, when to enter, look at this point. You see this point, the point where histogram and the red line connected together. The red line is 9 moving average. I told you it's called signal line. So whenever the signal line crosses the histogram, you can enter the sale. You can enter sale after divergence. So first we got divergence, then wait for the red line to cross the histogram, then we enter here. So the entry will be around this point. Then we can measure how much profit that will be after the divergence. Let's see how far the market goes. Look, it's big profit. It's big profit. Let's measure. Let's say we entered here. It's almost 28 points. That's about $28 on one lot size. So the first time you scalped, you made $28 on one lot size. You see, that's about $2.8 on 0.1 lot size. That's quite good. If you want to scalp, if you want to grow small account, that's very interesting. Now let's go to another market divergence. I'll show you many market divergences here. You just need to stay back and follow me attentively. So let's see if we have any market divergence. Let's go to okay, we have, let's go to October 1. Yeah, here there is a big downtrend move, no divergence here. So yeah, finally we got divergence here. Look at this point, look at this. These two spikes, connect them together, the arrow will be upward, right? Almost horizontal, but it's kind of upward. So when you go directly to the histogram which represents the first spike, the peak will be this one. For the second spike, the histogram will be this one, right? So try to connect those histogram peaks together. So when you connect those histogram peaks, the arrow will be downward. The first arrow is almost horizontal, the second arrow is almost it's downward. That's about -45 maybe, so it's pointing downward. This indicates we have market divergence here. The histogram is telling us that the market has diverged. I told you MACD is important to know the momentum reversal, trend reversal. It also tells you the strength of the market, right? So if there is divergence, the market is no more trying to go up. So now let's measure how much money will this be if we enter on the red line crossing the histogram. And let's say you want to scalp only 10 candlesticks or maybe 20 candlesticks. We enter here when the red line crosses the histogram. That's about 27. Again, you made $27 on one lot size without any single spike. You see, this is about 35 candles. For 35 minutes, the market has been going down after divergence. You see how much divergence is powerful? This is it. This is how the MACD strategy works. Now let's go to 1000. Look, there are many examples in boom 1000 I wanted to show you, but there is no time. The video will be very long, so I'll go to crash 1000 now and show you some of the examples. So on crash 1000 the same thing applies, but in opposite direction, because in crash 1000 the spikes are downward, right? In boom 1000 the spikes are upward. So let's see if we have any market divergence here. Yeah, I think I got the first divergence here. Look at this, look at this. These two spikes, connect them together, the arrow will be downward. Then directly go to the MACD indicators chart and connect the histogram which represents those spikes. The first spike will be represented by this one, and the second spike will be represented by this histogram. So if you connect them together, the arrow will be like this, perfectly opposite arrows. The first arrow is downward, then the second arrow is upward. So this is perfect example of divergence. So after the divergence, you don't have to wait for anything, just wait for the let me show you here. Wait for this line, the red line, to cross the histogram. That means we enter here, the same point. So let's measure how much we got here. This is big win, this is big win. Let's say we entered here, that's about 58 points, $58 without any single spike. You see how much MACD divergence is strong. Even from gold digger, I prefer this one. Actually, I just got this one this week, so I just wanted to share for you. I was happy. Okay, so this is it. This is how you scalp boom and crash in 1 minute. Just stop what you're doing now, go to demo account, install the MACD to your chart, then follow the things that I've showed you and try to find market or the MACD divergence. Then follow the market, see where it goes, and then after, if you are confident enough, then you can apply it on your real account. I'm not lying, I'm applying this strategy on my real account. It's very helpful. Whenever you see MACD divergence. So this is it. Thank you for following. If you're new to the channel, please consider subscribing and smashing the like button. I'll be back on the next video. See you.